Now, I'd like to talk to you real quick about silver. And I mentioned to you recently, when I'm watching this, my jaw's like dropping when I see the numbers. Again, 100. Let's go back to just the other week, a week ago, Friday, whatever it was. They dropped silver $1.36, I think was the apps was by the end of the day, and it may not have been that much because I think I was watching the access market, but nonetheless, let's just call it $1.36, whatever, drop in silver on that Friday. I think it was last Friday, unless it was a Friday before that. I don't quite remember, to tell you the truth now. But the video, 192 million paper ounces of silver were traded on the COMEX in the span of 10 freaking minutes. 10 minutes, 192 million ounces were traded. I covered this and told you it's the elite. We already knew it was them manipulating the market. And the reason I did the video was to say how shocked I was that literally 2 days later, by Tuesday, from that Friday when it happened, that it had already erased basically what that raid did on Friday, the cartel raiding silver on Friday. So 192 million paper ounces were sold, short of course, dropping the market, and yet it barely budged, went right back to where it left off by Tuesday. And again, here we are today, the 17th, and it's basically in the same spot. It hasn't, there's no real, and they rated at 30 cents yesterday. Still hasn't really moved. Having said that, I told you my thoughts on this, and that is this. The amount that it moved downward, that $1.36 that they smashed it, and it took them 192 million ounces to do that, dropping that in 10 minutes, or dropping those contracts, that much volume, whatever, on the market in 10 minutes, told me that it is taking a massive more amount of paper contracts and the banking cartel's money, because they lose when the price is up and they have a short position out and the price keeps going up. They're taking a beating. So then if they go out and sell all their or not all of them, but a good amount to cause a stampede like it used to back in the day, you could see anywhere between 3, 4, 5, 6, depending on how much, 3, 4, 5, 6, 7 even dollar drop. You could see that much if they would have dumped that just a couple years ago. Just a couple of years ago, literally. That's what I said, a couple years ago. And I mean, when I made the video a week ago or whatever, I even said then, 2 years ago, if they would have done this, it would have smashed it several dollars, $5, $6 probably. It only moved at $1.30, and then, oh my God, 2 days later, it had already recovered. Absolutely unheard of. So I was just listening to an interesting interview with Max Kaiser, and I think he was talking to James Turk. And they were talking about how it's the 2-year anniversary of the Silver Liberation Army's thing of buy silver, crash JP Morgan. And this guy, I think it was James Turk, and I just watched it today, he said, did you know that 2 years ago, and he said, I'm not talking about the derivatives, we're just talking about strictly paper contracts, short position, or whatever position that the banker named JP Morgan, of course, has, was somewhere around $8 billion. That was their position in silver. Their short position, of course. Today, it has doubled. 2 years later, their short position is now around 16 or 17 billion dollars. So it was 8 billion 2 years ago. Fast forward to today, it's now double that, 16 billion. That absolutely tells me I was spot on with what I thought. Which, I mean, not even necessarily what I thought. I just saw it and reported it, just like the rest of you. So, not like I'm, rubbed a magic ball or something, crystal ball, and it told me this. But I put all this together real quick. 2 years ago, if they would have dropped 192 million paper ounces, market would have crumbled. Silver market would have been destroyed. And it took a while to build back up. What has happened now, again, the other week, a couple weeks ago, whatever it was, Friday, they did that. It dropped at $1.36, which was absurd for me to even see that. I'm thinking, that's all they got? That's all you bankers got? Like, really? $1.36 is the best you can do with 192 million paper ounces? Are you kidding me? And then Tuesday, all gone, back to where it was. Pretty much. I mean, it was right there in the same range. So, now it makes sense. They used to have an $8 billion short position. They've had to double it. JP Morgan has had to double their position, short position, to maintain control of the price of silver. And if it doubled in 2 years, seeing the more and more action, which, by the way, I think it was Thursday or Wednesday or Thursday of this week, literally days ago, that I saw record volume. The record number of volume on silver had broke the record. Now, naturally, when you hear that, the number of volume, well, man, there must have been, well, the price should have skyrocketed or plummeted, right? I mean, volume one way or the other. You could have massive volume because there's a massive sell-off. You could also have massive volume because there's a massive amount of people buying in to cause the price to go up. In anything, it could happen. It didn't really move. When I looked at the price of silver, it was just kind of like, it didn't really go anywhere. Yet there was record volume. That's incredible. If I'm seeing record volume, is that telling me that there's a lot of people wanting to get in, and then the elite, the cartel, as soon as they see that, and it's all electronic, as soon as a certain number of threshold is met, boom, start selling off. It doesn't matter if they lose, doesn't matter if they're taking a beating and they're on this position they're holding. It doesn't matter because the Federal Reserve is giving them the unlimited amount of money they need to continue doing this. AKA $40 billion a month to buy back mortgage-backed securities from the banks. And not all of the banks, just a select few. And one of them's JP Morgan, of course. Again, that number that I used to talk about, I can't think of if it's on the COT report or what it is on. But they used to, if there's less than 4 banks participating in any kind of position in silver, it would just read as 1. They could just say 1 on this particular report. It is noted as 1, even though there could be 2 or 3. And if there's 1, 2, or 3 or whatever it was, it just reports as 1. So we all knew it's probably just JP Morgan. They're setting it at 1 anyways. And then fairly recently, when I say that, I think it may have been early this year when I first heard this. I don't think it was last year. It could have been, but I thought it was early 2012. Where I found out that number now says 4. They now say 4, which means there has to be a minimum of 4 now. And if I recall correctly, once they hit that threshold of 4 participants or bankers participating in that silver market positions, that again, they're short positions, 4 or more has to be reported. So if a 5th person comes on, they got to report it. 6, or I say person, company, 6 bank comes on, they got to report 6. A 7th one comes on, they got to report 7. But 1, 2, or 3, they could report it as 1. Once they hit 4, it's got to be reported as 4. I forgot the reasoning why they said they wanted to do this. Like even on the alternative media world, I don't remember the reasoning of why it was important for the bankers to hide it. I guess they wanted to pretend like there was more parties involved, when in fact it's just JP Morgan. So they could pretend, well, it's up to 3 banks or commercial positions, whatever, different entities. So we're just going to report 1 as the law or rule, whatever says. Now that it's 4, they have to report 4. So that happened recently. So if JP Morgan's involved, let's say, I don't know, HSBC, Bank of America, Citigroup, whatever. These are the 4 guys. And I'm not saying that they all are. We know JP Morgan is. And I'm hearing that, again, on the Max Kaiser show, he mentioned that HSBC is being investigated for silver manipulation as well. So let's just assume HSBC, JP Morgan, and then 2 other banks, we'll just say Citigroup and Bank of America, are now involved in that. In other words, JP Morgan was going to get slaughtered if it had to maintain that short position itself, even though it increased its short position. Again, 2 years ago was $8 billion worth of money involved in that. Now it's taking twice that, $16 billion or thereabouts. And let's assume there's 3 other banks, total of 4, now involved. So JP Morgan's at $18 billion, bringing HSBC, bringing Citigroup, bringing Bank of America, and it's taking all of them with massive amounts, billions of dollars, just to maintain the gold and silver markets? Is that where this is going? Is that what my mind is telling me is happening? I think so. Having said that, because they are fighting tooth and nail to keep these prices somewhat stable, the trend is still up. Even when they do a slam, the trend is still up. And he mentioned there's 3 cycles that basically markets can go through, including gold and silver, or when I say markets, but more like a thing within the market, like gold or just silver or some stock or whatever. And it's funny because it reminded me of the truth, the definition I give every now and then of the truth. The truth goes in 3 phases. First, it is ridiculed. Second, it is violently opposed. And then third, it's common knowledge. Oh, it's the truth. it was kind of similar to that. I forgot the exact wording he used, but basically, first, it's ridiculed. Basically, it's nonsense. This is not a bull market. Get out of gold. It's nonsense. Second, few people start to pay attention, and then it builds from there. There's already a high level, and then a bull market will start to form. So even though people think, oh, this is the top, the bubble, you guys are in the bubble, no, bozo, it just started. In other words, $1,700 gold, $32 silver, the bubble has just started, except he mentioned something about silver. I'll get on in a second. Regarding gold, he says they're on phase 2. The third and final phase is, in fact, when it becomes, well, again, everyone's aware of it and people start piling in. Then you have the bull run that goes crazy. He said in relation to the gold and silver, gold's on phase 2. Out of 3, phase 2 for gold. Silver's on phase 1. He says silver's on phase 1. In other words, they've been ridiculing it. It's nonsense to get away from it. And he says when it finally gets back to $50 again this next time, and it will, he says, no doubt. When it finally gets back to $50 silver, then starts phase 2. In phase 2, it's going to bring it to a whole nother price point where he said he expects by not too distant future, a year or two or something from, I think right now, something like either $36 or $163, one of the two numbers, for silver. And it's only phase 2. That's what it's going to bring it to when you go to phase 2. That was, in other words, when we had $400, $500, $600 gold, let's say $600 gold, and then it went to $1,000, oh, bubble, bubble, all the people on TV, everything, oh, bubble. It entered phase 2. $1,200 gold was sustained, 14, 15, 16, 19. Oh, they got to crash it down. 15, 16, 17 again. We're back to 17. We damn near touched 18 again recently. We were right. I mean, it was there. So that's phase 2 for gold. Next for phase 3, it's going way up. And again, let's just say it doubles. Let's say phase 2 equals a doubling. And let's just say, for silver's sake, it's going to $100 in phase 2. And we're not even in phase 2 yet. And to be fair, with the same example I gave, that means it's going to double after phase 2. That means $200 silver. That's my extreme kind way for the bankers, being nice to the bankers, telling them that's as far as it's going to go. It's only going to go to 200. No. It'll be hundreds of dollars an ounce, especially when priced in the deflationary dollars of the world. See, the problem the bankers and elite have is how can they allow their fiat currency empire to crumble and devalue while simultaneously controlling the one, not even the one, but multiple things, all commodities, and control those prices so they don't reflect that. We don't want the people figuring out that all of the fiat currencies, especially the US dollar, which sets the prices of all those commodities, by the way, is crumbling, and you would see much higher gas, much higher food costs, much higher anything commodity, much higher gold and silver, and especially gold, because that's the go-to thing to look at when it comes to countries and currencies and economies and how's a country doing, etc. How's gold? What's the price of gold? So even under all this manipulation, considering it was just a few years ago that gold was like $600, literally just a few years ago, $400, $500, $600. It's now $1,700. Silver, again, several years ago, was $4 and $5 an ounce, and they've been fighting both tooth and nail to keep the prices down this whole time, and they can't keep the prices down. So what does that mean? What mechanism allows them to keep the prices down? The COMEX, the paper market, the futures market. And in that futures market, they allow for anybody who has a contract to come up with the rest of the money to buy out the contract in full and say, I'm demanding delivery. I want the full contract. In case of silver, it would be 5,000 ounces. And I believe if it was gold, it would be 100 ounces. That's the size of the contracts. Full size, standard contract. So again, if it's taking JP Morgan twice, 2 years ago, twice the amount of paper money, paper assets, paper futures contract, the whole 9 yards is twice basically the amount that they used to do before to keep the market somewhat controlled, and even somewhat controlled, it is still rising slowly. What that tells me is there's going to be he gave the perfect example. Max Kaiser gave the perfect example of what that means. He said take a cinder block and attach a little bungee cord to it and then start pulling on it. Keep pulling, keep pulling, Keep pulling. And when it finally meets that threshold, it's not a countdown. You can't see it coming. It just is boom. All at once. It's released and the block comes flying forward a little bit or whatever. The thing it doesn't do is just like start inching or start sliding. When that bungee ward hits that threshold, it just jerks it and that's it. What he is saying is there's going to be that jerking when the elitists, these bankers, lose control of silver. How that'll happen, we can speculate about. And a lot of people tend to think, well, the COMEX will just be destroyed overnight. It'll happen. They won't be able to deliver good, deliver. They'll tell everybody they can't deliver or whatever, or there'll be delays in delivery. That'll be the sign, etc. Where I'm coming from, though, is I don't think they would. They know how much silver they really have, what the fake numbers, and who they've stolen and borrowed and resold and released 1,000 times. They know exactly what's out there. They know exactly how many fires they got to put out every month. At the end of every month, they can see what's standing for delivery. They know. So if you're the elite and you can tell we are about to be in deep doo-doo, say December 2012, when they go to deliver on that contract, we are in big trouble. What do? How about another MF Global? There was a lot of people standing for delivery of gold and silver, didn't get it. Not only did they not get it, didn't get their money back. It was given to JP Morgan. So isn't that amazing? The entity that everyone in the silver world, gold world, is saying is manipulating the prices, needs a lot of money to manipulate those prices, was the same entity that got the money from MF Global, John Corzine, and is not considered to date of being fraudulent, illegal, felony, nothing. Just sorry about your luck. You guys had segregated accounts. Sorry about that. It's gone. So you would see another one of those kind of events, maybe a lot bigger than the MF Global. And I think that would reach a threshold where people say, oh my God, I can't trust the market anymore. So if everyone gets out of the market, how many people are going to actually be in the silver and gold market? Like literally, how many people are going to stick around and stay in it? So that would also tell you, well, then in that case, can't the elite they'll finally have their way where no one's participating in the market except JP Morgan and then HSBC and the other banks, and they're just playing hot potato between each other, and no one's even playing. Then they could control the price indefinitely. However, there's a problem. We have mining companies, and mining companies have to go to that market to hedge. They all do it. Even though they're in silver, they are, I think, what they call a bona fide hedge. And just like a farmer who produces corn and he's worried about a bad, potentially low price yield coming up for his crops, he'll go out and get a futures contract to kind of offset what he feels there could be losses, so that if there are losses in his real crop, he made money on the futures contracts and it kind of evens out and skated him through. The mining companies do the same thing. So if they do that, and as prices increase, costs increase, as I mentioned the other day, it's looking like $30 silver is too low for mining companies because they are all, the big ones, are all posting losses. $30 to $32 silver is where they were all in at. For the last quarter they reported. That's what the price was. And they posted losses. So that automatically means as those prices rise, the elite, the club, have to let silver prices rise anyways, in a worst case scenario. However, with the WebBot, with other things, history as our guide, something has to give, something's going to happen. The prices of silver and gold will skyrocket. What the triggering event is, how the elite help or manage it is debatable. So, safest thing, again, just keep stacking your physical silver. In your house, in your safe, whatever, not on paper, not stored at some location that tells you it's safe, in your freaking possession. Take care.